Hi there, I'm back with another Trade Like a Sniper episode where I talk you through a top down analysis of an asset and I frame a trade on a lower time frame using ICT's concepts. Now, if you want to learn how to do this, check out my other videos on TradingView or YouTube. Or if you want private coaching or mentorship, feel free to contact me on any of my socials. So, without wasting too much time, last episode we did QQQ, very nice trade. Today let's try something different. I would like to try something that doesn't gap so much. So maybe a forex pair. Let's just try a forex pair. RMB, the Chinese yuan, right? Against how about our dollar RMB or RMB dollar? Or what is it? Yuan? CNY, sorry. USD CNY. CNY USD. Okay, let's do, I don't know which one's better. So let's just do USD CNY from ICE. Oh, geez. Okay, CNY USD maybe. Okay, that's a bit better considering this is on the 12-month time frame. So because it's so little data, I'm gonna go to the 4-month and start there. Okay, 4-month. Let's crunch up the charts so we don't get influenced. Pick a random point of time. And here we are. So, okay, let's start doing our top down. Annotating the charts. What do we notice? Most recently, there's a breaker in here with a gap, and so we get this. So what am I anticipating? Okay, we have a gap here. All right, and we have a gap here. And one here as well. Okay. And of course, we have one here. So current immediate target is here. Okay. Current immediate stop loss is here. For now, of course, that's too high compared to where our target will be. So, okay, I better write down 4 months then. I'm looking for these to be inversion fair value gaps. And I want to make sure I know that they are the 4-month gaps. 4 months, maybe later. And this, of course, is a busy. All right, so let me go to the monthly then. So this is the month. So next month we have here. So, and this breaker. Okay, so let's play. All right, next month's here. Okay, let's start to play price a bit. We should get a retracement soon. Okay, so big one here. We could even take a long, but I'm a bit lazy. Okay, so on the month, this happened. What I want to annotate is here. This monthly block, 1 month, and of course there's a gap in here. I'm going to take this out because I know it's there already. So I'm going to put this to be 1 month. And I'm going to highlight the middle line here as well so we can see that. I'm going to the weekly now. Okay, interesting. Very interesting. We have the weekly gap here. I'm just going to make this a bit darker. Maybe even a bit darker. Real dark. And we have a weekly here. So these are weekly gaps. Came into here. And now we are coming up, right? So we should, at the very least, take out this high. Internal range liquidity, external range liquidity. Okay, not to be mistaken for this being internal range liquidity, external range. No, that's too far. We're on the weekly chart, guys. So there's plenty of trades to take on a lower time frame, but I'm not going to do that because I can't go to too low of a time frame. Probably could here, but I'm not going to. Could try maybe. So I want to see lower prices. Okay, this order block, is it going to be respected, or is it going to become a, okay, so it's being respected. So we got a gap here inside this CB. Okay, let's put this like a different color right now. So are we going to move higher, or are we going to shoot through that and go lower? It's trying. 3 Indians. We could see a lower prices. 3 stab up. That's normally the, I don't know, 3 Indians pattern, but it's usually 3 stabs. Okay. Took out liquidity here. I really want to go down to the 4-month and see that we can't. Else we'll see too much. There's a breaker here. All right, we took out this high here. The breaker is up there on the 1 month. My only concern is this breaker gap here. Okay. That we come down and then we shoot higher. But I'm willing to risk one trade, 1R. The RR is pretty decent. Coming down to take out this low. Okay. Trading is not about winning. It's about taking calculated risks, right? So it's okay risking and being okay with being wrong and stopped out. All right. Sometimes you can try for a higher RR, but you have to know what you're doing. This is not gambling. Okay. You have rules set that, okay, if you fail the trade, you stop, or if you fail 2, you stop for however long, because we're all human and we all get psychologically affected as well. Okay, so we came down here. Big reaction, but let's see if we continue up into this gap. Equal highs. Okay, so we're into this gap now. I'm going to put my stop here because we break that, we're probably going higher. So I'm reducing my risk. It's too early to trail my stop because we can get stopped out there. Trail it to break even. Okay. All right. Now is a great time to trail my stop to break even, I would say. Equal highs. We should come into this gap here and then go lower. Okay, very weird. So we do go lower. We took out that low. Internal, external. Now we're transiting to a higher time frame picture. More candles that pass, we're going to get higher time frame structure and candles forming, right? Yeah. So we don't take this here and then aim too low because we can't get stopped out. You have to know where you are in the whole price continuum thingamajig. Okay, so see what I mean? But what's this? The weekly gap. We should come in and then go lower. Unless I jinx everything. Could go higher first. But, all right. Yeah, actually our target was here, right? Okay. Pretty sweet. Sweet one. So that was if I had my stop here, 6R. Very nice trade. You can do this on any time frame. And this is how it should be. If you look at all the other trade, like a sniper series, there are rarely any losses. And these are all randomly chosen and random points of time. And I'm doing it live here with you. So trading live in a real environment, it's more difficult. Why? Because there's real money at risk. Secondly, there's a lot of waiting to do. You can imagine having to wait, for your setup to appear. You can imagine having to wait for your trade to pan out, and you're seeing candles as they form, right? every wick candle like this, it was once an engulfing candle. If you're watching at the top, then you're thinking to yourself, this is going up, and it comes all the way down, right? It looks very clear to perhaps to some of you, but yeah, if you're watching every candle form, then that's no good. What's important is the candle close on the time frame that you're monitoring. So yeah, let's go back to this one. Have a look. Where was it? 2019. Not bad, not bad. Actually, it came a bit lower. 4-month busy, and then shot out from there. So you see, pretty cool stuff that you can do. Create this double bottom here. Let's go to the 4-month. Have a look. Yeah, 4-month came down again. Didn't quite take that low, but I'm sure if you looked at maybe perhaps a futures chart, often you see that a price does take liquidity, external range liquidity, even if you see like a double bottom. Might be wondering, if you do trade ICT, supply and demand, you might be wondering like why do they leave that open? Sometimes to come back later, and sometimes um, the liquidity actually gets purged, was it swept, um, on another broker or on the futures chart or on a different chart, basically. Yeah, very choppy. Ooh, look at all these. Yeah, lately it's very weird. In the old days, it seemed old days. Yeah, in March 2019, it seemed better anyway. So yeah, that's it for this episode. I hope you enjoyed it. Um, yeah, like I said, if you need any help, feel free to reach out to me. Take care for the coming trading week, and I'll see you next time.